So next up, we have Chris Verhaegh. And I'm just going to switch over the controls, and I'll tell you about Chris in a second. Okay. So Chris, if you can hear me, if you could just click on share screen. And guys, Chris Verhaegh has wrote more than 100 weekly columns for optioninvestor.com. He's conducted seminars and workshops for Invest Tools and has been a frequent speaker at investor conferences and money shows. He's a consultant for a European investment bank where he taught technical analysis to their fund managers, advised their proprietary trade desk, and helped trade over $2 billion. He's wrote a logical problem and sold it to Dell Crosswords at the age of 14. And today, Chris is going to be showing us the pulse option secrets for weekly options. Chris, are you there?
Everybody, now for something completely different. Again, my name is Chris Verhaegh. I've been trading the markets for a long time. I started professionally back in the late 70s, back when my office actually had a ticker tape machine. I was so glad to get rid of it, and I would so dearly pay so much to have that thing again today. Today's presentation, we're going to talk about trading weekly options using math to generate fantastic short trading profits. I have to always start with a disclaimer, right? All securities used in this presentation are for educational purposes and are not to be construed as a recommendation to buy, sell, trade any of these securities. Now, the reason I have this up is because I'm going to talk about moves happening today. And since the market's got another 4 hours almost in it, I don't want you running out and buying something because you heard me talk about it today, right? This is for educational purposes. Now, we're going to be talking about trading options, and specifically we're going to be talking about trading short-term options. Understand there's over 10,000 stocks out there. There are probably 3,000 or so that have options available, of which a few hundred have weekly options. Again, we start with a large universe and we whittle it down. Now, we're not going to trade an option on a stock just because it has an option. We're not going to trade an option on a stock just because it has weekly options. We want to focus on a few, right? Technically there's too much of a good thing. And we whittle down by using our pulse system. Now, pulse is an acrostic. If you're not familiar with what an acrostic is, it's an acronym on steroids because it spells something. Pulse, P-U-L-S-E, right? Each letter stands for something. We're going to look at each letter individually. Now, in addition to pulse being an acrostic to spell something, I have the pulse system. Now, the pulse system is a book that I wrote. This is an actual paper book. I don't know if you can hear me turning the pages. It's 130 pages or so. Right? The nice thing about having a book is if you can take it on an airplane with you, you can take it to the beach, you can lie in bed and look at it. You don't always have to stare at a monitor that's flickering back at you. And it's also nice to refer to while you're looking to trade. Right? I film tons and tons of videos, and I write a weekly newsletter. As Kevin mentioned, I was actually first professionally published when I was 14 years old, and I've written hundreds and hundreds of articles, not just on stock. I've actually written travel articles and stuff. But the newsletter has a watch list. The watch list is the section where I whittle down to find the stocks that have the best math. It then has a section called Top 5 Plus or Minus. I take that watch list and I find a reason to trade a stock the upcoming week, right? And we then also review the previous week's recommendations, and we have education. What I like to tell everybody is this is a case where the emperor has no clothes. I will make a pick, on a Saturday newsletter, and the following Saturday we're going to see exactly how well I did with my pick. And again, we try and educate through the process. Now let's look into the pulse, each letter. We'll start with P. P stands for potential profit. Here's a screenshot showing Amazon call options from June 5th. Right? This is just over 3 weeks ago. And I have the open column highlighted on the left, the high column highlighted on the right, and you'll see the gains went from 300% to over 10,000% in a day, right? 10,000%. Now that's a big gain. You know, we're gonna look to shoot for more, trying to get more close to the 300%. And these are big numbers. And the presentation was using math to generate fantastic short-term trading profits. These are intraday moves. They don't get any shorter than that. I don't think they get much more fantastic than 10,000%, albeit we find lots of them that are. Buy and hold investors, right, can buy Amazon at 320 some odd dollars, hold it a week, and it's back to 320 some odd dollars, and they haven't done anything. But short-term option traders, you know, here again, 1 week afterwards, here's moves 300 to 500%. Right? We, trust me on this, Amazon, the math is on our watch list, and it can and does make our top 5 list. Now, is a 10,000% move, is that a typical move? And I ask this as a question. Now, this is from FCX. This is Freeport-McMoRan. This is the $36 put from November of last year. Freeport-McMoRan, by the way, if you're a buy and hold investor, is probably right similar, close to $36 right now. Let me see if I can tell you right off the top of my head. It's 36.09 today. 36.09 on June 27th, 2014. This is a 36 put from November 7th. Guess what? This is 7 months ago. Freeport-McMoRan hasn't moved at all. So if you're a buy and hold investor, you're not making any money. Now, I had a student that actually bought this option at the open of 4 cents, and he sold it at 32 cents. Right? He made 9 times his money. Pretty good trade. $100 in. Later the same day, he pulled 13,000 out. Is that more typical? All right. So I don't know. We're gonna answer the question: what's a typical email? So or typical trade. So here's an email that I got from the student. Right? He said, being a student for 6 months or so, I think I'm now getting it. He's been working as stiff small business owner his whole life, and he's been a big follower of Investors Business Daily. Right? It gave him a great footing for a solid retirement, but he needs to make money in 1 week like he made this week following my teachings. Right? And he lists all the stocks, the same email, he lists all the trades that he made a bunch of trades, he made like $7,000, $8,000 that week, which is not a bad week. And then he goes on and he says, I'm using stockcharts.com with certain parameters to tell me when to buy and sell. And he's offered me to call him and give him his information. I don't know, you might live in this area code. I want you to know that I have real students, right, that we communicate with. And one of the things that I get, people ask me, you know, hey, this is fabulous. Why do you write this newsletter? And well, one of the reasons I do is because I get a student like this that comes up with his own parameters and he's willing to share it with me. You know, I like to get insight from other traders as well, and it's nice to have traders that are trading the same system as me, right? And we can then share what he's learned with everybody. It's just not just, I've always said it's maybe one trader for the benefit of the group, the one trader being me, the benefit of the group being the all, but it's also the work of the all for the benefit of the one, where I get students that, you know, will show me trades. So I'm going to say that this particular trade is a more typical trade, right? And this is in regards to a couple stocks that I had in my top 5 plus or minus. And so we kind of made a prediction on a Saturday that these were stocks to trade the following week. And he traded, and he said, great call on your updates, Chipotle Mexican Grill and FAS. He said, so at 9:35 a.m. Eastern, I bought 10 Chipotle January week 4 500 puts for $1.95. He paid $1,965.35, which I can tell you from mathematics that he paid $15.35 in commissions. He also bought 10 FAS January week 4 85 puts for 35 cents each, right, which is $350 plus the same $15.35 commissions. He's attached screenshots. He says, I closed out both transactions for a one-day net gain of $6,538.44. Fantastic. And I said, this is more typical. Is this more typical because he made $6,500 in one day trading stocks that I recommended a few days earlier? No, I say this is more typical because I want you to notice the times of his entry and exits. Right? So he's got the buys down on the bottom. He bought at 9:35 and 9:36 a.m. Right? 9:35 and 9:36 a.m. He bought these 5 and 6 minutes after the open. Right? He sold them at 15:56. He sold them 4 minutes before the close. Right? So the point is, when you have a good system, right, you don't have to be in front of the screen and totally monitoring all the time. You can buy near the open, you can sell near the close. That's one thing that we typically do, is buy near an open and possibly sell near a close. Sometimes we'll buy near the close of one day, hold it overnight, and sell near the close of the next day. All right, so having said that, let me, and again, you can see what his total gains were here, and I like that my students email me. So let me get my thing going again. Now the question then is if that's a more typical trade because he bought at the open and sold at the close, is this a more typical trade? Right? He says, excuse me, she says, I want to let you know that I traded Salesforce.com today, and that was on my list. If my math is correct, I realized 500% on this trade. Now, this was just virtual trading. See attachment, make comments. I still have to watch more DVDs. So I say this is typical because, one, I give you a lot of education. They're not watching, not consuming all the education, but they're already being able to implement it. I like this in that they are paper trading, virtual trading, and then they ask the question, is their math right? So they bought an option for 16 cents and later the same day sold it for 96 cents. They're $350, right? After commissions became $1,889, and not factoring in the commissions from 16 to 96 is exactly 6 times in price, and it's a 500% gain. So is it 5 times or 6 times? That's the question I ask. These are the kind of numbers we look for in a daily move. So I've showed you P, potential. We do this following the acrostic U, upside reward, right? We try and find setups that make a minimum of 100%. We are looking at minimum to double. And this will make a little bit more sense why we are looking for setups that make a minimum of a double. Again, we're trying to do this in a day. L, low risk. Many of these trades was only pennies per share. Again, that previous example, they bought an option for 16 cents, right? We've had students that gave an example where they buy it at 35 cents. We have students that gave an example bought it at $1.95. If you pay $1.95, maybe you don't buy 10 contracts if you're a smaller account. But if you pay 16 cents, you can try one if you want. You're going to be risking $16. The acrostic P-U-L-S-E, pulse, spells something. P-U-L is our system for finding stocks, right? It's our rejection method. I've created a spreadsheet. I'm more than happy to send you the spreadsheets, right? I give it to my students. I show them how to use it, how to download free information from Yahoo Finance, plug it in the spreadsheet, do all the analysis. You should, by using my spreadsheet, come up with the same watch list that I do, right? This is no secret algorithm that's proprietary that I'm keeping. I made it. I share it. It's not black box. It's white box. To me, learning how to trade is sort of like playing the game of Clue, right? Is it Colonel Mustard in the living room with a knife, right? Or we try and look through the market to figure out where we can make money. Now, continuing with the acrostic, PUL, that's our rejection system. Now we get to S. S can be stocks, is a setup, right? S can also be strategies. Now, as far as a setup, we can have a stock-specific setup, or we can have a market-wide setup. So I'm going to give you an example of a setup. I'm going to call it Green Mountain Coffee Roasters, GMCR, and I'm going to use the day June 27th, 2014. Hey, that's today, right? Green Mountain Coffee Roasters this morning gapped up about $2 at the open. And so one of the setups we believe in, if a stock gaps during the day, gaps at the open on a day, there's enough extra information coming into the marketplace that it's shocked the traders, investors, right, institutions, that they believe, hey, this stock is not worth what it was at the close of business yesterday. It's now worth this new amount. When that happens, we feel that stock will not flatline the rest of the day. So if you were happen to go look at, and I don't want to send you away from the market right now, but if you were to go look at some GMCR options today, right, particularly the call options, you will see that, as example, the 124 call opened at 60 cents. It's traded for $3.10 as a high. The 125 call opened at 41 cents. It's traded to $2.30. The 126 call opened at 32. It's traded to $1.70. The 126 is open at 25. It's traded for $1.23. The 120, I'm looking at this, 8 has opened for 18 cents and traded for 84. These are all roughly 500% moves today. This was a stock-specific setup that caused GMCR to move up. It was the gap at the open. Now, sometimes we have a market-wide setup, like a FOMC event, right? An FOMC meeting or a non-farm payroll. S, part of the pulse. We can also use it for strategies. Right? Maybe it should be PULSSE, but that doesn't spell something, or doesn't spell something correctly, so I don't do that. Strategies. We have directional or non-directional. Directional would be buying a straight call, thinking the stock's going up, or put, thinking it's going down. In the case of GMCR, if you didn't know what it was going to do after the gap, all you had to do was buy both the call and the put. The fact that the calls moved up 500% in price more than covered up for any loss that you would have had on the put. E stands for events, right? Again, we can have a stock-specific event like an earnings report, albeit we do not trade before the earnings, we trade after. And again, we can have a market-wide event. E is also entry. We can enter at a particular point in time. I mentioned earlier, buy at the open. Right? We can also look to enter at a particular price. If a stock does this, right, we can enter. We can exit through target orders, right, a limit order. So as an example, if you bought a GMCR option at 60 cents and you would have been happy to take $1.50, you could put a limit order, boom, you would have sold. You're out. You could possibly put a stop order underneath it and rise as it goes, right? The bottom line is we try and make money by buying low, selling high. Now, understanding that the reality is that stocks are one-dimensional. With the exception of a dividend, the only way to make money on a stock is to buy low and sell high. Stocks are one-dimensional, their price. Options, on the other hand, are multi-dimensional. Options have a lot of information that goes into them. We look at this in terms of the Greeks, right? Option Greeks, and I'll get into some of those maybe a little bit here in a bit, trying to be cognizant of the time. The bottom line with options, though, in my opinion, is that the reason to trade options, there's two reasons to trade options. One is how much could you lose? Again, when you buy an option for 16 cents and there's 100 shares per contract, you can lose 16 bucks, right? That's maybe I don't drink coffee, so is that what, 1 cup of Starbucks, maybe 2. Yeah. Anyway, how much could you lose, and then how much do you use? Small accounts. I'm going to tell you something. The strategy we're talking about, I cannot think of another strategy that will work as well for a small account as this. And the interesting thing is you don't necessarily need a small account to do this. You can have a big account and then just play with a small amount of it. So the reason to trade options are leveraged directional plays. Historically, people have used options as stock substitutes. People have bought deep in the money call options because it costs less money than buying the stock, it risks less money than buying the stock, and it has a high delta, right? Because call options give you the right to buy a stock without an obligation. A call option is a bet the stock is going up in price, right? I tend not to use options as a stock substitute. I tend to use options as an option, and I understand the math that goes into options. Right now, a put option will give you the right to sell a stock without an obligation. A put option can be either an insurance policy that you buy on stock you own, or it can be a bet that the stock is going to go down in price. Again, call options move with the stock, put options move the opposite of the stock. Now I'm going to take a quick drink here. I mentioned that we tend to trade options, so more often than not, we will look to buy a non-directional. We will do that by buying what's called a straddle and or a strangle. A straddle is a call and put with the same expiration and the same strike prices. Right? There's basically only one time we buy straddles, and that's when the stock is equal to a strike price. Mathematically, that's the sweet spot. Typically, more often than not, right, we will buy strangles. Again, the difference, a straddle, it's a non-directional bet a stock will move. It is the same strike price and same expiration, where a strangle is a call and put with the same expiration but with different strike prices. Now understand, when we buy strangles, we always buy a strangle with a lower strike price put and a higher strike price call. Right? Everything we do is rule-based. We get rules, not sometimes, not maybe, but always. Right? And I think rule-based, when you understand the reason behind the rules, it makes a lot of sense. Now, a strangle is a non-directional bet a stock will break out. Strangles will cost less money than straddles, and they have more leverage. They will be wrong more often, but when they're right, they make a lot of money. Right? Again, I mentioned earlier the GMCR. We look at an option, the 127 call opened at a quarter, went up to $1.23. Again, that's 2 cents shy of 5 times in price. Right? That's risking very little money. Right? And if you weren't sure what to do when GMCR opened, right, you could have bought the call and the put. It opened at 122, so theoretically, or 122 in small change, you could have bought a call $5 out of the money and a put $5 out of the money, and there's a good chance you lose everything on the put. But when you make 5 times as much on the call, in the scheme of things, you still make money. Now, a great majority of our trades are these non-directional trades, but there will be times that we have a direction, right? So this is from a newsletter last year. I talked about, this was when Tesla was going to release its earnings. Again, we do not play earnings before they're released. The implied volatility is too high, the options are too expensive. We wait afterwards. But in the newsletter the week before the earnings, I spelled out, I wrote, if Tesla gaps up, I feel the reversal has a higher likelihood of being the better trade. If Tesla gaps down, I feel the continuation has the better chance. Both involve buying the puts. As always, you can hedge yourself by trading strangles, buying both the call and the put. Right? So later that week, I got a testimonial email. It says Thursday at 9:39. Again, this is right at the open. This is 9 minutes after the open. I bought 5 of the 143 puts on Tesla at 42 cents. right? 5 contracts at 42 cents, that's $42 a contract, that's $210. He placed a limit order, basically trying to triple his money at $1.50, and he left. 2 minutes later, he was filled, right? I suggested puts no matter where it opened, and it worked. Here's a testimonial the next day from a different student. He says, as a newer student of 3 or 4 months, I had a great week trading your system. Here are my results. Bought 1 contract of Tesla November 149 put for $1.38 and sold for $6. 1 contract at $1.38 is $138. $6 is $600, right? This is roughly 4 times his money. Not a bad trade. Brings up an important point. Sloppy slop. Any system that requires you to trade it perfectly is a system doomed for failure. Ask yourself, what have you done perfectly lately? I know that I don't trade anything perfectly. I don't do anything perfectly. My wife reminds me, and when she doesn't, my kids do. So we have a system called sloppy slop. Sloppy slop is that we don't need to get all the move. We just find moves so big that we can get a lot of them. Again, I'll use the Green Mountain Coffee Roaster of today. You got moves of 500%. Is it okay if you just captured 2/3 of that move? I think so. I bring this up because the 143 put that the guy bought for 42 cents and sold a couple minutes later for $1.50, before they expired, right? Before they ended, they made it up to $10. He bought them for 42 cents. If he could have maxed out with no slop, he could have sold for $10. Right? That's quick mathematics. That's 20 some odd times his money. 20. That's 2,000%. You know, he made 300. He's happy with 300. You need to be happy with 300, right? Raise your hand if you'd be happy with 300% moves, right? Either on Tesla, it's got a 2,000% move, or Green Mountain Coffee Roasters today that had a 500% move. Would you be happy with 300%? Again, we have the Pulse system. I wrote a book, right? A physical book. I film videos. I write a weekly newsletter. I've been writing this newsletter for years and years and years and years. I'm a professional writer. I've written lots of fun stuff. The newsletter has a watch list, which is I do the math for you. I'll teach you how to do the math. If you want to do it yourself, you should come up with the same results as me. I take what I consider the 5 best stocks from that list, and I write more extensively about them. And every week we review the previous week. We try and teach you how to do this. Right? It is my goal to teach you how to exploit a setup. And so one of the stocks that I have talked about for years is Schlumberger. Right? It's ticker SLB. If you type it out, it looks like Schlumberger. It's not Schlumberger. It's Schlumberger. And I've jokingly called myself a SLOB trader. Since its ticker is SLB, we add a small O, and we're slobs. So here's a slob move from 3 weeks ago, right? 3 weeks ago. We had it closed one day at 6 cents. So if you could have bought it at the close, you could have bought it at 6 cents. If you bought it at the open, right, and you paid 14 cents, guess what? It closed at 89 cents. That's up 1,300% from the day before. 1,300%. That's 1,300 and some odd percent. That's a good move from one close to the next. Now, Schlumberger, this is not a one-trick pony, right? Here's Schlumberger from a week ago today, right? Again, you'll look and you'll see the previous close on Thursday, June 19th, was 7 cents. Boring old Schlumberger opened the next day at 7 cents. Again, this is the 109 call, opened at 7 cents. It traded up to 70 cents. Now, it gave some back, right? So the move was 10 times. If you just bought it at the open, you know, on Friday, or bought it at the close on Thursday and then held it to the close, right? You know, the last trade was 20 cents. That's just 3 times your money. Again, I'd like to think that you can, you know, you would have been either happier with the move you got before because it would have hit your limit order, or you could have been trailing the stop and then got out closer to the high. That's Schlumberger a week ago. right? I want to ask you to ask yourself a question. Have you ever traded Schlumberger before? Right? Have you ever traded Schlumberger before? Have you ever heard of Schlumberger before? I'm about to show you a move of Schlumberger from earlier this week, right? Now, if you make me, I can show you moves on Schlumberger from 3 out of 4 weeks a month. And in a sense, I'm showing you 3 out of 4 weeks this month. Here's a move from this week on Schlumberger. This is Wednesdays, right? So Tuesday's close on this 110 call was 13 cents. Wednesday's open was 12 cents. Right? This particular option made it up to $4.36 before rolling over and closing at $3.90, which is a 2,900% gain from one day to the next. Coincidentally, this option has since gone up to like $7. I think it was $7 yesterday, or it should have been up to $7 because Schlumberger traded for like 117 bucks. I made a video a number of years ago on Schlumberger, right? Schlumberger used to have strike prices every $5. It switched to strike prices every $2.50. It has since switched to strike prices every $1. My publisher no longer sends out the video on Schlumberger as part of my package because it's old. You know what? I don't know that it's old. Schlumberger is one of my favorite stocks. I tell people, learn this stock. Right? Learn this stock. Now, somebody just sent me a thing that this option made it to $8.45. That's not a bad move for 12 cents, 13 cents. I guarantee you, being a slob trader with slop, you're not going to go from 12 cents to 8.45. You're going to get some of that middle in there. The beauty is it's got a big middle. All right, so here's an email that I received yesterday. Thanks, Chris. I got in SLOB this morning, right, and got out with a $1,000 profit in 15 minutes with 10 contracts. I enjoyed your service very much. Too bad I am not a day trader. Thanks again, TAK. Right? He made $1,000 in 15 minutes, and he's not a day trader. I think what he means by not a day trader is that he does not have $25,000 in his account. Right? If you small accounts, you can set it up as a set up as a cash account. You're void of the day trading regulations, and since we're buying options and selling them, right? We're not doing spreads. This is simply buying options and selling them. You don't need a margin account. You're not subject to the day trader regulations, right? 15 minutes made $1,000 on Schlumberger. He's a slob. And I guarantee you, if he was in this thing longer than 15 minutes, he would have made more money, but he's happy. Now, we talk about short-term options, right? So here's an Apple move from earlier this year, right? The chart is a 5-day chart. I show that for the first 3.5 days, you could have bought this option for under 50 cents, and then boom, it accelerated to over $7. Right? It's actually the low 17 cents, the high 7.05. That's just ridiculous percentage. Right? We'll stop and call it 1,000% move. Right? 1,000% move in a week is not a bad thing. Having said that, this is a short-term option, but we don't always trade short-term options. Right? In my newsletter last year, I had a situation on Apple where I recommended people buy long-term options. Now, I gave reasons on why to buy long-term options, and I gave rules as to which ones to buy, and it didn't matter to me if you bought an option that was 2 or 3 months out or a leap a year out, as long as you followed the rules. So here's a short-term gain on a long-term option. This is July 29th. This again, these two examples. One option that has 81 days to expire. The other option has 109 days to expire. These are deep out-of-the-money options. One was $60 out of the money. The other was $80 out of the money. And both these options made roughly 30% in one day. Right? So here's the thing. a 3-week gain on these same options. You could have made 30% in one day, or you could have held them for 3 weeks. Would have gone from $3 to $25, right? That's 800% move. So sometimes we get long-term moves. Sometimes we'll catch a trend on something. Again, real quick, the Pulse system. It's a system. Pulse, again, an acrostic. And I use the acrostic because I try and teach. My goal is to have you be able to do this on your own, right? I want people to renew their subscriptions. You know, obviously, I sell a subscription model. I want people to renew their subscription because I do a good job, because I'm constantly teaching them something new. I don't want somebody to have to renew it because they haven't figured it out yet, right? I've written a book. I'm a professional writer. I've written lots and lots of stuff. I think I do a pretty good job on making videos, and I use the acrostic as a memory tool. I want you to learn how to do this, and by using a memory tool, I think it becomes easier. Right? There is a learning curve to my system, but it is very rule-based. I write a weekly newsletter. Newsletter's 15, 18 pages with a lot of graphics, a lot of graphics. So don't say, oh wow, 15 pages, that seems like a lot. Right? We have a watch list. That's the stock that the math says should have options double each and every week. We want to have an option that doubles, because if we buy a straddle or strangle, if we can double at least on the call or double at least on the put, worst case scenario, the trade is a wash. We don't lose any money, right? We take that watch list, we find the 5 best, plus or minus. Some weeks it might be as low as 1. Some weeks I've had 10 or 12. We always review the previous week because we're trying to educate you. Again, the top 5 is literally 5 setups, plus or minus. So real quick, on my February 22nd newsletter, I had 4 stocks in my top 5. BBRY, which that's not Bed Bath & Beyond, that's not Best Buy, that's BlackBerry. There we go. eBay, Schlumberger. Hey, Schlumberger. How many of you guys ever heard of Schlumberger before today? I've picked it before, right? And Tesoro. By the way, Tesoro, earlier this week, Tesoro and Valero gapped on for whatever reason, they gapped. And that became stock-specific setup, and you guys could have traded Tesoro and Valero earlier this week, and I have a testimonial from somebody that actually did, but it wasn't in my top 5 this week, but back in February it was. 4 stocks, top 5, plus or minus. This week it was minus. So here's Tesoro. We had the 51.5 call. It went from 35 cents to $1.32, and then it sold off. Right? Again, this shows you why you want to have a stop loss, and it also shows you, you know, I've heard. Has anybody ever heard that 85% of options expire worthless? Right? Has anybody ever heard that 85% of options expire worthless? I think it's closer to 50%, because when a call's expiring worthless, that means the put's in the money. But having said that, we're not holding options until they expire. Right? We're buying them and selling them. Right? We are going in, taking money out of an intraday move and then leaving. We are not doing this as a stock substitute. We are not buying a call with the intent of exercising and owning the stock. We are trading the option as an option. So this option went from 35 cents to $1.32. How much you made on it depends on how sloppy your sloppy slop is. But it was a setup that you could make money. Schlumberger, this is terrible. I got to show you that it only moved 7 times in price. Again, if you look at Schlumberger, you'll see the previous close was at 23. The open was at 22. Right? Previous close at 23, open at 22. There's no gap happening in Schlumberger. If you want to be a If you don't want to be a day trader, you try and buy it at the close of one day. If you don't mind day trading, you buy it at the open of the next day. You know, here again, this was picked in the newsletter, so it's not just Schlumberger because it's permanently on the watch list. But I said, hey, here's the reason to buy Schlumberger. Moved up 7 times in price. And then we have BlackBerry. terrible. It went, previous close was a nickel, opened that day at a dime, went to 29 cents. So, and then sold off to 14 cents. So you can see that the change from one day to the next is 180%. 180%, that's a terrible trade. All right, so now we have eBay, same newsletter, same recommendation. This is the 22nd newsletter, which is a Saturday, and so on Monday, this option opened at 9 cents, right? It rallied to 55 cents that day, so that's not quite 5 times its price or whatever. It sold off a little bit, but by the end of the week, the same option hit $2. Right? How often have you been able to buy an option for 9 cents? That's $9 a contract. How long have you been able to risk $9, right, and then pull in $200, right? 10 contracts would have cost you $90. 10 contracts would have brought in $2,000. Now, I don't think somebody would have been insane enough to put $900 into this trade, but if they did, they could have pulled out $20,000. Right. So, continuing, I've been doing this. I should be good at math. 36 years now, right? Back in the old days, and I've got a lot of experience. I shared in my newsletter. No one's ever quit because I've taught them too much, right? I teach you a lot, and one of the things, I try and speak, and sometimes I trip over myself. I say, hey, here's a trick I want to show you about, or here's a tip, and a trick, and a tip, and a trip, and they become a trip, right? So I want to give you a trip, right? Schlumberger is a stock you need to look at, right? Las Vegas Sands is also a stock you need to look at. Las Vegas Sands didn't move so much today, but we hit it for some profits yesterday. Now, a couple things. I talk fairly fast, so I'm probably ahead of schedule, so that'll give me a chance to answer some questions. But before I answer questions, I want to talk about what we have, right? I have my Pulse system, right, which is my book, which is video, which is the weekly newsletter, right? And I do webinars occasionally, sort of when I can fit it in my schedule and whatnot. I trade. I have students that trade, and my students make money. Now, I've actually been doing this a long time. I'm a professional writer. I'm actually a professional speaker. I filmed a video for a different publisher than my newsletter's publisher, and we call it Polarity Trading. And this publisher sells Polarity Trading for $149. And the publisher of my newsletter bought out almost all this other guy's inventory, and so I figured, hey, he's going to sell this thing, but he decided to give it away. But there's a limited quantity, so I'm going to tell you what I'm selling, because everybody knows that this is a sales presentation of sort. But I'm going to tell you something. I don't offer discounts. There's no buy this now special. My stuff is the same price as it was 4 years ago. There's only one difference, right? This Polarity Trading video, which should be $149, we have a limited quantity, and we're giving it free to people that join today or tomorrow. And after that, I cannot promise you that there will be any. And for that matter, I probably will run out, and my publisher will have to get a couple more made to guarantee that anybody wants to buy in the next 2 days. So if you buy in the next 2 days, I guarantee you can get this video. Other than that, you can't guarantee anything. My system is simply $97 a quarter, right? And it will stay 97. It's not a loss leader 97 now that jumps to 197, 297, 397, or 997. It's $97 a quarter. And you can renew automatically. My system has a full money-back guarantee. If you can't double your money 20 times in the next 20 days, just send it back, or we'll give you your money back. And even if the reason you can't double your money 20 times is because you don't try. So there's really no risk. It's like, when you think about it, it's like buying a call option for very little money. You got lots and lots of upside, and really what you're risking is just a little bit of your time. So having said that, I'm going to try and answer questions for people, because there's a whole bunch of questions, and I've got about 10 minutes or so. All right, give me a second. I got to get this. So someone said, do you look at bid prices and sell at bid? As a general rule, right? As a general rule, you know, we're going to buy at ask and sell at bid, and we're going to lose the bid-ask spread to the market maker. And because of that, that's one of our rejection systems. That's why stocks do not pass the pulse. I don't want to buy an option for 25 cents that bids a nickel, because the thing's got to, like, you know, quintuple in price for me to break even. All right, I got to, these questions are coming. I got to pause them here a little bit. How much out of the money do you buy or sell puts? First of all, I don't sell options. We sell options to take a profit, right? We sell options to take a profit. This system is simply buying options. I'm not selling anything. I don't have any more risk than the debit I pay. And so how far out of the money? That's part of the math that goes in the pulse system. Let me tell you real quick. There are 5 option Greeks. There's delta, gamma, theta, vega, and rho. We buy short-term options. You know, some people say, "Hey, look at the fast decay rate on the short-term option." My answer is, these options have no time left, so there's little, if any, time value left. We buy an out-of-the-money option. It has a low delta, but it's got a super high gamma. We make all our money on gamma, right? And if you've ever talked to a credit spread trader that's had a trade go against them, they lost due to gamma. They you know, it's a great strategy. Anytime they lose, it's probably to a guy like me, right? And we calculate how much a stock should move in a day, and then we feel that a stock has a higher probability. So I'll give you an example. Green Mountain Coffee Roasters, right? The implied volatility on Green Mountain Coffee Roasters was predicting about a $2.50 move today, but the average true range on Green Mountain Coffee Roasters is closer to $4.50. Options were cheap. Options were a no-brainer on Green Mountain Coffee Roasters once you understand the math. And if you think you can get a $5 move and you buy the 127 call, which is $5 out of the money, you can make money. Now, I think it was probably a better move to buy like the 124, right, which was only $2 out of the money, and it was $2 out of the money at the open, and then it was almost $3 in the money at the high. That's why that option, right, went up 500%. All right, question: does this system work on any day or best on Fridays? It will work on any day, but the best days are Fridays. I have some of my students have changed their work schedule to work 4/10s. They work Monday through Thursday, 10 hours a week, so they can have Friday off. They're getting to the point where they're making more money on the Friday trading my system than they're working the other 4 days at their job. So, you know, most of our setups do take place late in the week. We have ways of trading stocks earlier on in the week. And again, I showed you Apple options where we bought options that had 90, 100 plus days to expiration. So, you know, certain setups, you know, we'll get all the time. Someone said options seem very abstract to me. I teach you options. I understand options. I believe I'm a teacher. Again, I use the acrostic as a memory tool. I think I do a pretty good job of presenting. I think I do a pretty good job of writing. I'm going to tell you something. I have one of the highest renewal rates of any newsletter writer out there. Maybe it's because of the inexpensive price of $97 a quarter, or maybe it's because of my great recommendations, and maybe it's because of my cute stories. What is a typical size account to start? I have guys start with $500 accounts or smaller. To me, there's nothing. You know, the smaller your account, the more you have to paper trade. And I will write in the newsletter, I will write, hey, this is a trade. You want to back the truck up, right? Beep, beep, beep. They're going to load it up with money. That's a time, really tiny accounts, they might have to wait for a trade like that. Bigger accounts, they might size up on a trade like that. Someone asked, how big is the package and do we send via USPS? Yeah, I think we send via the post office. I actually don't do the shipping, so I can't tell you how big it is. Someone said, how do you not incur the day trader regulations? Day trader regulations are for margin accounts. If you read the rules, it says margin accounts are subject to day trader regulations. The theory being in a margin account, you can borrow money and the government doesn't want you to lose money that you don't have. And therefore, if you set it up as a cash account and not a margin account, you're exempt from the regulations, and so you can day trade. Having said that, I will give you lots and lots of recommendations, and I try, and part of the thing is to say, hey, this is one for speculators, or this one's, I try and qualify them, which I think is my years and decades of experience allow me to do, and I think my writing skills try and make those points a little bit more understandable. So someone said, not understand exactly what my service is. It is a newsletter. I sell you a newsletter. I renew the newsletter. Every quarter, if you want, you can cancel at any point in time. But I also, to get you to understand what's in the newsletter, I've written a book, right? I wrote the book figuring we'd sell the book on its own, and then my publisher says, no, we'll give the book away to get students to join, right? If you're already a student of mine, you can buy this. We'll give you the book, we'll give you the DVD, bonus DVD, and we'll just extend your subscription. So, it's not going to cost you any more. You get to have the book. Someone said, is this Excel based? Yes, I will send my students the Excel spreadsheet that I've created so that they can do all the calculations on their own. What is a typical number of different positions a rookie should start to consider with? I say start with one. Start with one with real money, but paper trade as much as you can. What broker do you use for weekly options trading? Most every brokers can use that, can do this. I don't like to recommend one broker or another, because the one I don't mention is the one that's going to call me up and say, hey, why do you do this? Someone said, do you do more debit spreads than credit spreads? I don't do spreads. This whole system is simply buying a straight call, buying a straight put, or buying the pair. How many trades do you give out per week? Well, 5 plus or minus specific ones. Do we have a special promo price today? I never discount ever, right? I never discount ever. The promo here is this video. When these things run out, they're gone. Do you use any charting indicators in your decisions? I do use some charting indicators. I love the Bollinger Band. To me, the Bollinger Band is a very simple indicator to use, and we get big hits off the Bollinger Band. Now, I don't have the time to tell you how I use it here, but I can use it. The crazy thing, though, is when you learn my system, you learn you don't even need to look at a chart. You just need to look at the price of the stock, right? The strike prices available, the prices of the options, and then just look up the, if we can look at the average true range, you'll find when an option's cheap or not. So I went to the website to sign up, and there's nothing about getting the Polarity Trading book. The Polarity Trading is a video. You will, I don't know what the website says, but this link, trust me on this. You sign up, you get my Pulse, my book, The Pulse System by Chris Verhaegh. You'll get the Polarity video if you sign up in the next 2 days. If you after that, I cannot guarantee you'll get it. And you'll get this newsletter for a quarter for $97, and you can quit within 20 days and get all your money back. And then if you want to renew, it'll be renewed automatically at $97 a quarter. There's no lost leader up front. You can quit at that point in time. You can quit at any time afterwards. How often are my newsletters sent out? I try and get them out every Saturday, sometimes earlier than later. In the years and years and years and years that I've been doing it, they've come out Sunday morning twice, and that was more of a technical difficulty. Some trades, someone said, do you buy options the day before or just buy and sell on Friday? Again, you looked at some of those examples from Schlumberger where the previous close was the day's open. And so we tend to trade near the close of one day or near the open of the next day. I just want to say, Evan, you know who you are, Evan. You asked a great question. I'm not gonna answer that here for everybody, but yes, I think the light bulbs went off over Evan's head. Someone asked if the book is available online. No, we mail you an actual book. I'm a writer. My wife said, give something that the kids and grandkids can actually have. Give a legacy thing. So we actually have a book. Some of these questions are asking the same thing. Again, someone said, if you're already a member, you buy this and we'll just extend your membership. That way you get the book and the video. I want you to know that I'm constantly updating things. Again, the Schlumberger, when I filmed the first video on Schlumberger, and I've been a SLOB trader since I can remember. Not that I have long-term memory loss or anything, but Schlumberger has strike prices every $5, and then they switched to every 2.5, and they switched to every 1. So my publisher thought the video was a little bit outdated. I'm going to have him put it on our website so members can actually watch it and learn, because Schlumberger is such a great stock to trade. All right, someone said, is the Polarity DVD the same as the Pulse System DVD? No, they're different DVDs. And I write a newsletter, and I think I do a good job. All right. So again, people are asking, I don't do spread trades. These are straight calls or straight puts or a combination of two. Here's a great question. Is the newsletter electronic? Absolutely. When we publish on Saturdays, we put it up on our website and we send you an email that it's available, because it's too long, too big of a file to email you directly. So we send you an email saying, hey, it's there, go download it. Kevin, I think I'm basically out of time. One last thing, my trades rock. If you were a subscriber for years and years, you will see that my trades rock. Anyway, I think I ran out of time. I think I did a fairly good job. You've been with me before. You know my stuff works. So
absolutely, you always do a great job. And guys, just again, if you want to check out Chris's offer, you just go to realtraderswebinar.com/winners package.